Welcome back. You're tuned into Chartbusters here on CNBC TV18. Well, the markets are not doing much, but just take a look at the broader market. Something like an Adani Green, that stock has taken off. It's moved to the high point of the day. Volumes as well high out there, so keep an eye out on that stock. And a couple of other names like a GNA Axles as well. That's doing well. Remember, that's the axle maker. Part of their revenues come in from from tractors. That's close to 25-30% of their revenues coming from there. The management has told us that they are functioning at higher than capacity utilization. So that's the other one as well. That's moving higher. But the real star in the last few days has been HIL. The stock has been surging. It's been moving higher. And in fact, as we speak now, it's holding with a gain of close to 10%. Earlier today, it was up more than 14-15% or thereabouts. But let's understand a few aspects from there. We have Mr. Dhirup Roy Choudhary of HIL who joins us on the show. Hi, Mr. Choudhary. Pleasure talking to you, sir, and congratulations on a solid set of numbers. I was looking at your roofing business, and a couple of the competitors came out with their set of numbers. There was a revenue decline, but you have managed to deliver flattish revenues, which is quite commendable in this sort of an environment. Could you give us a sense on whether you have increased your market share? If yes, by how much, and what has it gone to?
Thank you very much, Nigel, and good morning to all the viewers. Yes, I think the company prepared itself very well with the day zero planning, and we were able to ramp up our manufacturing as soon as the COVID situation got relaxed for all our factories. And we have been able to get also the heat maps through the digital route extremely well oriented. So we were able to get into and break many counters. I think the volume has been, we have been able to capture the volume well in May and June. And our market share definitely has gone up by 1%. So we would be hovering around 20-21%, while I think all our competitors would be around 16 or lower than that.
Good to know that you've gained 1% market share, Mr. Choudhary. If you could tell us if you gained it at the cost of some pricing, because what we saw across the board, Everest and Visakha showed about 20-50% growth in their earnings before interest and taxes. In your case, your EBIT has actually declined by 5%. If you could comment on why that happened and the outlook for the remainder of this year?
Thank you, Mr. Mangalam. No, I think the right context should be understood here. Last year, same quarter, some of our competitors could not do as well as we did. So we had a robust performance even last year. This year performance, of course, has been slightly daunted because about 20 days we have lost out in April, as well as the manufacturing got a setback initially, so the inventories couldn't pile on. But I think overall we have done very well. Our competitors have done very well, so I congratulate them. But there have been critical issues around fiber procurement, as well as on the foreign exchange and CPVC raise in prices. But we have done a very consistent cost-saving drive using the idea management digital route. And we are very hopeful that these numbers of our cost drive will continue to bring the profitability up during the year.
Okay, all right. Let's get to a couple of numbers. Then you've delivered more or less flattish numbers for the first quarter. That's bulk of your business in the roofing segment. Last year you did around 730 crores. This year, what's the target?
Very difficult to anticipate the COVID implications, and we are really hoping that the country comes out of it as soon as possible. So while performance from our side will be looking to make the best of the situation, being proactive in the market, I think we are hoping that we will be able to continue through a robust performance.
All right, difficult to give numbers. If you could tell us a little about Parador, it did better in this quarter than expected. The last couple of quarters, we've seen margins at around 6-6.5%. Over 1265 crores in revenues last year. What's the target for this year and also on margins?
So there are quite a few things that has happened in Parador. The market around Parador has literally collapsed in quarter 4 last year as well as quarter 1. You know what has gone through in Europe, and substantial revenue of Parador comes from there. The rest of the world has almost died out, so that's another hit to Parador. But they have continued their performance. They've kept all the factories running. They have kept all safeties well in place, and we have done the e-business and the DIY. And the brand of Parador has sold very well. So Parador has done definitely much better than even our expectations, and the margins have improved considerably. We are hoping that while summers are always a depressed seasons for Europe, but we are very hopeful that Parador will continue its ride.
Couple of numbers, Mr. Choudhary, if we could get from you. One is Parador. What kind of a number are you looking at? You've delivered some bit of a growth, which, as you said, is commendable in this sort of a scenario, given that most of Europe was shut. But what kind of a growth can we look at for this year for Parador? And also the second part is that your debt has reduced by around 120 crores, which is quite great, because the last quarter you told us will reduce it by around 150 crores. So for this year, what can be the debt reduction at HIL on a consolidated basis?
Thank you. So Parador, very difficult to give any projections because of COVID. We don't know really the second leg coming in and other things. But if things stabilize, Parador will grow, because we have looked at joint ventures in China. So China has to really start kicking. We've got another joint venture running in the Nordic countries, in the Scandinavia. And I think that particular thing should work out very well for us. Spain and France also are very strong sales teams which have been now kick-started. So we are looking at positive drives there. So hoping that COVID does well, Parador should give consistent results. I'm very difficult to give a number around it, but I can say that definitely the performance will be far better if the COVID really wets down a little bit. So far as your debt is concerned, yes, there has been a good cash flow management that the team has done, and I'm very proud of that. I would say let's focus on the long-term debt, and let's focus on the Indian part of long-term debt, which was about 214 crore. As we start the year, we have reduced it a bit. I hope that this will come down to 100 crore by the end of the year. And therefore, the other part of the debt is primarily the working capital and also long-term debts in Europe, which are pretty much okay, because the interest rates are much lower there.
Mr. Choudhary, thanks a lot. Pleasure speaking with you. We wish you good luck for the remainder of this year. So that's a confident Mr. Dhirup Roy Choudhary saying that they are looking to bring their debt down, long-term debt down to around 100 odd crores by the end of this year. They've repaid the debt. Their business did better in terms of a top line, at least better than their peers, and as a result of which we're seeing a big move on the stock, not just today, but the last couple of trading sessions as well. But before we slip into a short break, there's a quick programming reminder. CNBC